Welcome to the Coffee Experts Club. If you're at all interested in anything we talk about in this episode, go ahead and check out the description down below. Or if you even just want to know more about us, click on the links below. Now on to the episode.
It's Coffee Experts Club. Good to see everybody. I love that everybody's got Ben's clatterbuck on lockdown now, like his little fingers.
Finger guns, baby.
Morning, guys.
Good to see you guys. Drew, how's Belize today, man? We all just live vicariously through you. Tell us about our tropical destination we all wish we were at, that you live in. It's your daily life. And you're like,
by my green screen behind me, you got the beautiful palm trees at the bank over there swaying in the breeze. So it's a good day today.
I love it. It's been rainy a little bit though down there, yeah?
It has. Yeah, we had about 5 or 6 days of good rain. My yard is yet unmanageable. It's about knee-height grass. And I don't own a machete. So I'm going to have to go buy something to maintain it.
Like, you drive a motorcycle. How do you get in? Do you just drive in the rain on your motorcycle and just get soaked and just get to your place soaked?
I have a rain jacket.
Yeah. But your butt's wet, right?
When it's raining, I don't leave the house.
Love it.
That's so funny.
And if I get wet, I sit around for about 10 minutes and I dry off.
Right. A lot. I love it. The tropics. Awesome. Well, hey, we've got a guest joining us today, the amazing Faith. She is, the reason we brought her in is we're going to start really leaning into topics on a consistent basis. And one of the topics we talk a lot about here on Coffee Experts is finance, because we really believe in it. And we also feel like a lot of coffee shop owners don't nail it in this regard. You know, I mean, a lot of coffee shop owners are living by book, like their bank account accounting. They're just, and when there's a lot of money in that account, they're in the best mood. They're like high-fiving baristas. They're the coolest guy in the world to be around. And then when the bank account is dropping and getting lower and lower and lower, they're like the grumpiest, meanest guy around. You know what I mean? Because it's like money's feeling low. And we'd really love for people to not have to live in that like roller coaster of how finance can work. But the only way you can get in front of that is by really dialing in your back of shop and how you're running your books, you know. And so Faith is under the hood for the Collab team for 5 different accounts. She's doing the books for 5 different accounts. Like she sees it every day, day in and day out. And she is on a lot of those accounts with Drew, you know, as Drew is consulting different coffee shops out there. And so, I mean, pray for Faith, because she's with Drew on a lot of accounts. But I think that Faith sees a lot of things, knows a lot of things, and we just thought it would be great to bring her onto the show today. So welcome, Faith. Great to have you.
Thanks, guys. Happy to be here. I think that...
yeah, tell me. What do you think?
I mean, yeah, I see a lot of books. I see a lot of business owners who really would like to understand the data that is brought forth from their books. They want to know, you know, how profitable am I? What's my labor? What are my cogs at? How can we, you know, shuffle some things around? And I think it's hard to explain sometimes that I need a more detailed picture in order to give them that kind of analysis of their business. So I think, yeah, a lot of times where people get stuck is their cogs are very general. They're just like, yep, throw it into cogs, the general, you know, chart of accounts, expense section. And I think we can really get a lot more information the more detailed we get with cogs, with things like office expenses, with even utilities. I think a lot of the times people will throw it into one big chart of accounts expense and then forget about it. They're like, why are utilities so high? And they don't split it up by electricity, water, phone, internet. Maybe your internet provider upped your bill by $100 this month, but you wouldn't know that because you've thrown everything into utilities together. And so I think it can make it hard to pull apart when things aren't split up into subcategories of that expense line item. So that's what I find a lot of the times is, you know, we spent double on milk this month. You wouldn't know that if you threw everything together in cogs. So you would just say, why are my cogs completely out of hand? I also think...
Hey, what are your thoughts on... I think that a lot of times... the reason it ends up like that for most coffee shop owners is because most coffee shop owners are their bookkeeper. I mean, like they don't have a bookkeeper. They just felt like, I can figure this out. Or maybe they started at the beginning, they couldn't afford it, so they figured it out. And so the way they figured it out was they just like QuickBooks out of a box. A lot of them couldn't afford QuickBooks. So some rando program out of the box that they just started throwing numbers into. And then like, that's just how it's grown over time. You know what I mean? And so I think that it's very, if you're listening to this show, just know we're not throwing shade, but I mean, like there are a lot of times I know, Drew, you're on the account with Faith where he was like, hey, I could really use some help with my books. He brought it in, and it was like his books hadn't been reconciled for all of last year. You know what I mean? Or hey, like we hadn't straightened it out. And it's like, well, it's really hard to help to know where you're at. And maybe Drew, you can lean in a little bit from that perspective, because I know Faith was like, hey, would you be able to lean in and help explain and like help walk him through on like, how do you stay out of that mess? I think you have to start somewhere, right? And then maybe you could just kind of walk us through what your advice would be as you work alongside Faith. Because I feel like a lot of times you're a translator, right? Faith's like, nerdy, boop, 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 like all the details, right? And you're like, but I've got to explain to this visionary that doesn't live in this world. Faith, I mean that in the coolest way. We're the coolest way.
I know, sure.
Talk about the translation group.
Well, I think first of all, we as business owners, we think you should have a boss, and your boss should be your accountant. And I'm grateful that Faith is my boss sometimes, because I can go up and down, as Aaron mentioned, with the highs and lows of the cash flow. Because we look at the day-to-day, we look at the week-to-week, we look at the month-to-month, but really we're not always looking at the bottom line. So for me as a business owner, I don't understand all of the numbers. I don't understand all of the insights. I don't really understand how to categorize everything. I don't always know what it all means. I understand daily sales and I understand a bottom line, and that's great. But to get to the point where you have a realistic a bottom line that reflects reality, you're going to need somebody like Faith. You're going to need somebody who understands the numbers and can tell you, hey, here, you're overspending on these things. Your percentages are out of line on these items. You know, you are allocating money to this area too much. You're wasting on this product, that product, or alternatively, you have money sitting aside here that you could probably invest in either marketing or some sort of event for your team. There's a lot of creative freedom and peace of mind that can come from having somebody who understands how to run your books and does a good job of reporting them and explaining them to you.
Yeah. I think too, like what I found is that this is all what we've been talking about all the way through, right? The whole delegate elevate exercise. Like, what is your brilliance? Like we've had coffee shop owners that are just like, please God, take this off me. I suck at this. I obviously suck at this. Look how bad my books are. And it's like, we would love to take that off of you. And just like Drew said, create a channel where you can just ask us questions, like run things like so that you don't want, you're the decision maker. You're not the one that's like doing all the doing too. And you're going to make better decisions if you have better data. And it's going to take somebody like a Faith that can do that, you know. And I know, Ben, for you, I remember back in the Roasters days where like you have all these district managers underneath you, and all those district managers all have managers that are seated underneath them. And maybe you can speak to that a little bit, because I know you and I met a lot around books, and that's how we developed things like our incentive matrix. Everything came out of having a clean set of books that we could coach people based on. Maybe you could speak about that a little bit from a leadership ops perspective on the importance of numbers on even being able to coach up your team.
Yeah, I mean, we've had to Drew's point, like the creative aspect doesn't happen until you have a solid foundation of those books from the owner side, from his operational side as an owner. Like he won't really have a true picture of like how much on my cogs, how much of a backstop of syrup can I order ahead of time, which is going to cost more. Like if you need to stock up for, because you guys are in Belize, for example, if you need to stock up for 3 months worth of syrup because shipping is bad, do you have the money available to do that? Can your bottom line sustain that? So from that front, you got to know that. But even from the staffing standpoint, like I worked just recently with a client about this. She wanted to start running bonuses for her employees. Can't do that unless you know how much money you're bringing in. Because if you start giving bonuses out and all of a sudden, you know, that bank account runs dry again, you go, oh no, from the managers ordering their daily products, the district managers reviewing what they're ordering. And then those district managers are also ordering dry goods and cogs for multiple locations, getting ready for grand opening. Like from the bottom of the organization all the way up, there's cash that's being spent, there's cash that's going out. And then from your you know, HR standpoint, like there's cash going out monthly for benefits. You know, do we have a 401k match? That's revenue going out or money going out. All of these things can really, if you're not listing them and line iteming them correctly, start to really spiral if you just start going willy-nilly. Like you said, you know, it's the revenue is coming in, the bank account looks good. So, hey, everybody gets bonuses. The next month you go, oh my God, what did I do? Because now the bank account is dry again. So from what I did and what we did, especially with the P&Ls and our line items, was say, okay, owner, this is how much your bottom line looks like. Now, owner, you said that you wanted to start an incentive program, a bonus program for managers. here's what that looks like realistically if we want to bonus X amount. Well, your bottom line is going to shrink by this much, or you're going to, set aside this percentage of net revenue for those bonuses. You can only have those kind of conversations if you know what that bottom line is. And you have to then be able to account for those bonuses moving forward. What's my bottom line now? Because every month I'm giving out X amount of dollars.
We just had interesting that you say that, because I just this last week, we had taken over an account at the beginning of the year, and they had been giving out bonuses all last year, right? And they're coming into a money crunch right now. Almost the exact scenario you're lining out. But we had just taken over their books, we started in December, I think, and carried them into the new year. And we had to have a sit-down conversation about, hey, you're bonusing off top line. Like, no, you can't bonus off top line. No, not like, it's got to be at some level, some sort of net, whether that's like, and not everybody loves like a profit share, like when it comes to like true net, because they're like, yeah, but if you take a bunch of trips to Vegas and you're spending like 20 grand, like I don't want my profit share to come out of that. And so that's what caused us to create the incentive matrix, where it was like, no, what are the sticks they can control, right? They control their labor, they control their cogs. So let's create an efficiency net that we take that off of. And then a percentage of the efficiency net is what we're going to use for bonuses, rather than you're giving them too much off the top line, not taking in consideration, just like you said, Ben, you're being too generous. Like, it's too much. Like, a wrong number to start with. But if you haven't broken them out, it's really hard to get to that place. And so we dropped we talked about this a couple weeks ago, but if you missed it a couple weeks ago, profitandloss.coffeeexpertsacademy.com, we gave you the way we would line out chart of accounts. Exactly what Faith's talking about, exactly what Ben and Drew are talking about when it comes to how should your chart of accounts be lined out so that you can get down to those numbers, so that you can know what are the sticks you can pull in order to see some sort of change. And I know Drew kind of made it sound like he's not good at this, but Drew's actually become really good at, I think, like reviewing profit losses. Ben too, but that wasn't things that they normally did a bunch of, but they've gotten really comfortable with looking at statements lined out this way and showing you where, hey, this is too high, hey, this is too low, hey, seasonally, these are where these percentages are supposed to be. When you've looked at as much data as we've had, coffee shops for all these years, not just one coffee shop, but dozens of coffee shops, and you watch the ebbs and flows, it makes it really easy to say, no, this is where your COG should be. These are where each line item of your COG should be: dry goods and energy drinks and coffee beans and dairy and all these different things that we break out. Hey, your dairy guy is bending you over the barrel. Like, you need to go back to him and talk to him about, hey, my pricing's not right here. This isn't right. Or I'm going to have to go find another dairy vendor. Like, I can't keep doing it this way because it's not fair. My beans vendor is just killing me on pricing. Everybody knows beans are up right now, but there are other roasters that have taken it in stride who have better strategies. Good Bean is one of our local people here who've gotten in with big grocery stores, so they're producing at a high volume so they can afford to drop their pricing. And if you understand how pricing works, you're able to find those vendors that are in your neighborhood that are still local roasters if you're not roasting for yourself, and get a better price point. But if you don't know how much you're paying on beans and how much historically you paid for beans, you don't even know you're getting robbed. You don't even know you're getting ripped off. And you're assuming, I like my roaster, he's a good dude. Well, he's a good dude trying to make money, so like, be careful and make sure you understand how much things should be going for. So profitandloss.coffeeexpertsacademy is a great spot. I would like to talk about, Faith, the only way you're able to keep these things straight is by proper communication channels, right? So I know, like, we have complete control of Coffee Day List Miles, right? Because it's mine and Drew's business down in Belize. And we've got some people that are the least technical savvy people, because in Belize, they just weren't raised around a lot of computers like we've been raised around a lot of computers. So we've created actual channels within WhatsApp where they're dropping you very specific things, right? So that you see different receipts come in, you're able to check and balance things easier. Do you want to talk a little bit about how, if you don't have good visibility, it's very, very hard for you to keep things clean, even if the chart of accounts is organized the right way?
Yeah, I think a lot of the times people trust in their vendors, and that's a great thing, and it can be a great thing. But I also think having a check and balance system with the boots on the ground is really important. Your bean vendor could say, I sent you this much, here's the invoice for the week. But if you don't have the boots on the ground saying, confirmed, yes, we received this invoice, and a signature or some sort of receipt that you can then at the end of the month compare to the statement, if you're billed monthly by that vendor, here's all the receipts, here's what they have on the statement, do those line up, and did I actually receive all of the product for the month or the week that the vendor said? Because sometimes things happen with shipping. It might just be a miscommunication from either side where things just don't line up. So I think it's really important to stay on top of that as well and make sure you're communicating as much with the vendors as you are with your team to confirm those kind of things. And I think consistency is really important. when it comes to that sort of thing, with the
I know that
reconciliation of vendors and also your books too.
I know that Ben, you and Drew both could probably speak to this for a minute about vendors that got away from us at Roasters. I mean, people that took advantage of us for months before we caught it, and we're like, what did you just like? And we realized, like, whether it was milk vendors, whether it was Red Bull vendors, whether it was whatever it was, where things we assumed they were being dropped off because that's what they said they'd been dropping off. They billed us for in the end, but having that check and balance where it's not just the bookkeeper that's just cutting, because I think that's the other thing we're talking about here, right? Is it's not just okay in my mind just to have a regular bookkeeper that's doing bookkeeping for the construction outfit down the street, doing bookkeeping for, the supermarket on the corner, and now they're also doing yours. It's like, what do they know about coffee? I mean, they don't have any idea about the intimation of your business. Find somebody that's a specialist who does bookkeeping for coffee shops. I mean, that's something that we offer at the Collab team is we offer bookkeeping for coffee shops and give you counsel based on what we are seeing, not to make you feel small or dumb, but to help you to save money, because those are the two different ways you make money, right? Either you grow sales or you cut your costs, but those are the two ways you grow your bank account. So maybe Ben, Drew, do you guys want to talk about vendors that kind of slipped away on us, and maybe a story or two that can top your head where we realized savings but a little bit too late?
Yeah, I mean the dairy one was that's an easy one. I remember swapping about halfway through. We swapped dairy vendors just because milk was going up and 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 up, and it seemed to be like every month the boss man owner would be like, what the hell? Why am I paying so much in dairy? What the hell? Why am I paying so much in dairy? And the only reason we caught that is because us as managers, we would take a picture of the invoice. We would send it to, I think, gosh, who did we send that? We had a general manager at the time. So he would collect all of the dairy invoices. That was just part of our duties. As the vendor comes in, they drop off their, whether it's dairy or whether it's dry goods. We look the invoice over, make sure we got everything, take a picture and upload it I think we were probably using just Stripe at that point. So they're looking over these invoices. And the only reason that we made that change is because they were looking at the invoices and realizing, hey, last month our bill was $3,000. Now it's $3,200. Now it's $3,400. Now it's $3,600. What the hell? We can't keep doing this. I think at the time that the dairy vendor was losing cows or something. Their business was shrinking, so they were having to increase prices on us, just to try and stay afloat. And eventually, we were like, no, we got to make a switch. Made a switch. Dairy prices were, I think, we saved at least 15%, almost 20% on our prices there. Great, stay with that dairy vendor from there on out. But all things that can happen if you're not paying attention, you're going to be draining cash, and 3, 4, 5 months go by, you've lost $1,000, $2,000, $3,000 just because you're not paying attention to it. Just like Faith said, you're not being communicated. Your people on the ground aren't communicating the invoices to you, and you're not watching it.
What I love, Drew, that I've watched you do that I think you do really, really well, is so down in Belize, it runs a little bit different down there, right? And it is a lot more analog, which I know most coffee shop owners are like, thank God, because I get me away from the digital. I want to go back to more analog. But it's nice in Belize where we can create a WhatsApp channel with our milk vendor, with our manager, with our bookkeeper, and then me and Drew, right? So like we're all seeing what's going on in this channel by the store. And Drew, I love where you'll be like, hey, Western Dairy guys, would you do me a favor? Would you make sure when you come and you stock our milk that you pull all the old stuff forward and put all the new stuff at the back? Like simple things where it's like all of us are now on the same page. We all heard that said, and it's not like that's going to fall off or we're losing a lot to waste. Because that's another thing, right, with your vendors is like that can be a line item on your P&L. Why are we spending so much milk? Is because we're freaking throwing so much away because they're putting all of the old at the back. And then we get to the back and we're like, well, that's expired. We can't use that now. And it's only going to benefit them because they're continuing to sell us more and more milk. So Drew, do you maybe want to talk about that? Just like vendor management a little bit on savings and staying in front of it. That can be with like our pastry vendor, right? That can be with our milk vendor. That can be with a lot of the different vendors.
Yeah. I mean, there's elements that we can't forget are involved on that side of things as well. And two of those things are the human element and competition. We're a customer, and just like we want to fight for our customers, they want to fight for us as customers. So when you have someone like Faith, when you have clean books, someone who can manage those things, it's a bargaining chip. You can tell them, this is how much I spend with you. This is the history of what I've spent with you. This is basically a measure of how much loyalty I've committed to you as a vendor. Is there any way we can work on bringing these costs down? And then you can also take those numbers to a new vendor and say, look, this is how much product I'd be purchasing from you on this basis. Would you be able to work with me? And what are some deals that you could work out with me? So don't be afraid to negotiate. We've done it with some clients from pretty much any vendor, from dry goods to pastries to milk to basically everything. We brought numbers and negotiated because of the fact that everybody wants to keep a customer. Nobody wants to lose a customer that brings them money every month or every week. And then another element is the human element, which is we've had instances here where it is a little bit of the Wild West, but things can happen in the States too, where there's someone in between the owner or director or manager of the company you're buying from and when you get your product. And what can happen is they'll add on 1 or 2 items. They'll add, okay, you bought 12 cinnamon rolls, but they charge you for 14 cinnamon rolls and pocketed a little bit of extra money. And so the checks and balances are just so important when you have visibility, as Faith mentioned, to have some communication channels managing your vendors. Of like, we're watching these things, and you don't have to be watching them all the time, but cherry picking things here and there tells you pretty much how consistent you can be on what you're getting versus what you're ordering. And then just bothering the person who's bringing your stuff a little bit, as you mentioned, Aaron, please rotate our items. We bother our pastry vendor of, please don't stack our muffins where there's big indentations on them. It's just little things that show the vendor that you as the owner, as a manager, as the operator, you're paying attention and you care about the quality, you care about the service. You're not just becoming complacent because it's worked for so long, which can happen. And that's usually when the problems start to slip in. So, using the proper communication channels to manage the vendors and bother them just a little bit, and then just consider your bargaining power, because you as a business, you're a customer and you do have bargaining power in that relationship.
And I'll tell you what, like, there's nothing that brings better peace of mind to me. Like, this is, and we'll close out with this today, but there's nothing that brings me better peace of mind than when I watch a vendor try and challenge us on something. And I'm like, oh, you just messed with the wrong dude. Like, cause I know Faith is on her stuff. I mean, they're like, hey, you didn't pay this invoice. Well, Faith is in the channel and she's like, actually, we did this, and this, here's the proof. And then it's like, well, it shuts that whole thing down. Whereas for a lot of times, like, business owners that are doing their own books are trying to manage their vendors like that. Somebody challenged them on a payment and they're like, shoot, did I pay that? And there's like, sometimes you can overpay, double pay, you know what I mean? Because you just aren't organized to know or not, did you pay that or did you not pay it? It's so nice just to have somebody that's going to take that stress off of you, give you all, like, shake down all the moving pieces and details, take up for you, like, here are the key kernels of truth that you need to make decisions. Now you as the business owner get to make decisions based on that. So Faith, we are so grateful for you. I know Drew and I both are so grateful for what you do for Company Los Mayas, but all the accounts that we're on with you, I think you do such a great job, as do all the girls that work for us from here at the Collab team doing finance for coffee shops. So check it out if you didn't get it earlier on the show. profitandloss.coffeeexpertsacademy.com. You can get that profit and loss for free. And I give you a little tutorial video explaining to you how it works. I think it's invaluable, and I hope you find the value in it. Ben, Drew, Faith, awesome to have you guys today. Coffee Experts, thanks for joining us today. We'll see you next week here on Coffee Experts Club.
Thanks, everybody.
Thanks, guys.